Hello traders, Day Trader Matt here of businesswithtrading.com, doing a crude oil futures trade video. This is a trade that we took a couple of weeks ago. It was a good trade, and it's a good trade to go over. What actually happened, what did we look for, and how we managed it. That's what we're going to look into today. The green line is our long, that's our entry, because it was a long trade. Red line, stop, and target. So that's what we basically did. Our entry, we were looking at, if price hits this level, we're going to get long, we're going to place our stop 30 cents below. Because in crude oil, that's about our max. 30 cents, that's pretty much what I'm comfortable with risking. You'll never see me get into a crude oil trade and say, I want to risk $1. I want to risk $2. You will never, ever see me do that. I think during the lifetime of the service, 50 cents is about, 50 cents is the most I've actually ever risked with crude oil. Because there's no reason to risk more than that. If you have to risk more than 50 cents, there is a problem. And risking 50 cents, there's going to be a target of over $2. There has to be, because if not, there's no reason. Risking 50 cents to make $1 makes no sense at all in my mind. So risking that amount, you really have to try for more. Risking 30 cents I'm very comfortable with, and risking 30 cents I'm looking for $1 plus. Doesn't always work out that way, but that's what I'm looking for. I've had some questions about that, so hopefully that would answer those. So anyway, we got long 59.50, stop 30 cents below 59.20, and then we were looking for price to move higher. And sometimes with the swing trading group, I'll enter the orders, entry stop, and say I'm looking for price to move above this level, and if so, we'll move our stop up, rather than just placing a target. This is where I want to take profit at, because sometimes price moves above our target, and that's when you get the really, really good trades. Like earlier this year, we took a dollar trade off. It was phenomenal. A yen trade. If you look at March and I believe it was April, might have been February and March this year, we just had some awesome trades because we were able to allow them to run past what I would have deemed as a target, and in doing so, they just became really, really good trades. A person that used to do that a long time ago, Jesse Livermore, if you've ever read about him, he's a pretty smart guy, and that was one of his core beliefs is it's easy to be able to enter at an area and take profit at an area, but it's difficult to allow price to move past where you think it's going. So anyway, that's a little bit about that. So anyway, we took the trade on the 5th of May is when we took the trade, and we actually ended up getting out on the 6th of May, so it's about a day trade. And what we did is we took the trade. I'm not sure exactly where we moved stops above. It might have been probably around here or something like that, but we kind of watch things. Price moved down. Over here is when I usually update the group again. Usually it's in the morning before the market. And when I say before the market, I mean like nicey hours, market. So, around 8:39 is usually when I send out an email. So this was over here, like, well, price has already come up. So we moved our stop up here above our entry, and then it came in again over here. Would have been the next email to the clients, and I would have said, okay, well, it's moved up nicely, and then moved stop up again, and then prices kept going higher. It was very nice. And then over here I said, over here I was like, alright, well, let's move our stop down here. If it gets hit, it gets hit. If not, we're looking for price to go higher. And then we had this ugly candle right here. Price moved up. It was moving up nicely. It was looking good, and then just bam, reversal. And sometimes that happens, and that's why you have a stop. It seems pretty logical. That's why you have a stop. Just in case price does roll over, what are you looking at? Well, in our entry down here, if price rolls over, our worst case scenario is a 30-cent stop, because price did go in the direction that we were looking for. Our worst case scenario over here became 2 points. And that's the way we look at a trade. That's the way that we look to manage a trade. So hopefully that made some sense there. Okay, so let's look at this a little bit more deeply. So right here was our entry. So we were risking 30 cents, and we ended up making $2. So that is approximately a 13 to 1 reward to risk ratio. If you can make 13 times your risk, you're doing very, very well. And that's why I talked about earlier, I'm comfortable with risking 30 cents on crude oil. I tried to make that the max. When we did risk that 50 cents that I talked about, we made over $4. So I look at everything in a reward versus risk basis. You're never going to see me risk $1 to make $14 just because that's too much risk. Even doing that is, yeah, it's very good. You're making 14 times, but what if you actually get taken out? What if you get stopped out on that one? The majority of my trades don't risk that much, so they're not going for that much profit. Sometimes they turn out to be great winners, like our dollar trade. I think we got in around 80. We got out in the lower 90s. Our euro trade, we had, I don't know, 2,000 pips or something like that. Our yen trade that we had was awesome. And those are trades that go multi-months, and they're able to run, to make money. Our cocoa trade last month, stuff like that. It just becomes awesome. So for one contract we made $2,000. Since crude oil is $1,000 a point, we're risking 30 cents. So we were risking $300. Which is a drop in the bucket for $2,000. And it just makes things really, really nice. It makes things really good, when you have trades like that. So anyway, hopefully you learned something today. You got something out of the video. We do things like this every single day. Sometimes they get filled, sometimes they don't get filled. But we're looking for trades just about every day. So anyway, if you'd like to check it out, link below. Thanks for watching. Have a great rest of your day, and I'll see you back here in the markets. Thank you.